There's a new law that has just passed all across the country, and it all is in hopes of giving the economy a major boost. Now, Morning Dose's Trey Serna talked to a local CPA about what it all means for you.
Well, because of the COVID-19 pandemic, the U.S. economy is really struggling. But the U.S. government just passed the CARES Act. But what exactly does it mean? Well, it stands for Coronavirus Aid, Relief, and Economic Security Act. So what does this mean for you? Well, Lucy Petry, a Houston CPA and tax attorney at Petry Law Firm, broke down some of the major points.
There are a lot of things that this act does. So we'll start with the IRA, 401k. Yeah, it allows you to withdraw the money and not have to pay the early withdrawal penalty of 10% that you would normally have to pay. And you will still have to pay the taxes, very important. Still have to pay the taxes, but you can pay the taxes over 3 years. If you already have a loan on your 401k, you do not have to make payments this year. You can take up to $300 of charitable contributions, even if you do not itemize. If you itemize, you do not have a limit on charitable contribution this year. It used to be you can only deduct up to 50% or some years 60% of your adjusted gross income. This year, you can deduct the entirety of your income as a charitable contribution so that you have no taxable income or reduces your taxable income. Unemployment, it has increased in both duration. You can take unemployment for longer and in amount. Unemployment is now available, at least for now, for self-employed individuals. This was particularly aimed at those the gig economy, like the Uber drivers who cannot work right now, but were not eligible for the loans. Are temporarily, payment can be temporarily suspended. You have to call them. It will not be automatically. If you are in default, it will be automatic. But on the collection side, the IRS is not pursuing collections, so they're not going to levy paychecks or any other assets at this time or seize them. Oh, very nice. If you owe the IRS, this money would not be offset, which is really nice. Normally, when you receive a refund, if you owe money, the IRS takes that money. But the idea is that they want to get the money out into the economy, and that will not happen if you owe money.
And with word that the government will be sending out stimulus checks, there's a question everyone's asking. Will I get a check?
And the answer is depends. The IRS is going to look at your last filed tax return, whether that is 18 or 19, to determine your income eligibility. $99,000 for individuals, of course twice as that for married couples, and $146,500 for head of households. If you make more than those figures, you're not going to see a check. So if you're claimed by somebody else, you're not eligible to receive a check. If you have a tax ID number, if you don't have a valid Social Security number, you're not going to get a check. And if you have unpaid child support obligations, you're not going to receive a check. Up to $1,200. And if you have a child, $500 per child. They are going to send it to the bank account on your last filed tax return. If you did not choose direct deposit on your last filed tax return, then it will go to the address on your last filed tax return.
Well, certainly a lot of information there. For more information or to see Lucy's full video, go to Lucy's Facebook page or her website, petrylawfirm.com. We've also got all the links on our website, cw39.com.